Well, holy flippity flip flop flap and smokes, everyone. China's manufacturing is collapsing. We have companies like Apple leaving, and many other companies are leaving China in droves. Ladies and gentlemen, what we're witnessing right now is the great fall of China. I'm sure you've seen lots of YouTube videos about how China's going to collapse in 30 days, 60 days, etc. Well, while we don't know exactly how many days it'll be until China collapses, people, it is happening. We are seeing the early signs of China's great fall. And why we have to pay attention to this is because China is the second biggest economy in the world. And if they fall, we're all going to pay the price, because China is also the manufacturer, or should I say, was the factory of the world. Well, that's not going to be the case anymore. And people, we've got some huge new news, some huge new data. So let's not waste any time, everyone. Let's get straight into the news, the facts, and the data about exactly what's happening in China. Okay, everyone, first things first, Apple accelerates plans to shift production out of China. Now, this is absolutely massive, because Apple is the most valuable company in the US and one of the most valuable companies and one of the most biggest companies in the world. So if China loses Apple, they're going to lose billions and billions of dollars in revenue, and they're going to see hundreds and thousands of employees go on the unemployment line. But like I said, it's not just Apple, and we're going to see more and more companies leave China in droves. So listen to this, Tesla cuts December Model Y output at Shanghai plant by more than 20%. Now, a question you may be asking, well, why is Apple and Tesla shifting out of China? Well, I think it's no surprise, everyone. If you've been living under a rock lately, maybe you haven't seen the huge protests that are happening in China. China is still continuing to go on lockdown after lockdown. Yes, while there was some news today to try to pump up the markets because the markets were crashing in China, that they're going to ease some restrictions. We all know once cases break out again, China's going to go on more and more draconian lockdowns. And so what this is making China is uninvestable. People aren't willing to invest in China because they can't trust the Chinese government, and also because they know there's going to be more and more lockdowns. And ultimately what this is creating is it's creating production uncertainty and manufacturing uncertainty. And so companies are putting in these orders to create these products, customers wanting to buy these products, but they can't get the goods. Listen to this. The company has been reportedly telling suppliers to actively plan on assembling Apple products elsewhere in Asia, primarily India and Vietnam, as other companies look to reduce dependence on Taiwanese assemblers, spearheaded by Foxconn. Again, there was huge protests in China at the Foxconn headquarters where they produce iPhones. Workers weren't getting paid. They were forced to work with people that were sick, and they weren't even getting enough food or water. The company's goal is to ship 40 to 45% of iPhones from India versus the current single-digit percentage, according to TF International Securities Analyst. Vietnam is also expected to shoulder more of the manufacturing of other Apple products such as AirPods and smartwatches and laptops. And don't worry, I'll get into in a moment about how manufacturing overall in China is full-on collapsing in the new report we just got. The decision was sparked by turmoil iPhone City inside Shenzhou, where as many as 300,000 workers assemble iPhones and other Apple products at a Foxconn-run factory, which produces roughly 85% of iPhone Pro lineup, according to Counterpoint Research. Now, something I've been talking about what's going to happen, everyone, is we're going to see the end of globalization, or we're going to see that we've hit a peak of globalization, and we're going to see more diversification of supply chains and also bringing more manufacturing onshore. We're also seeing a lot of manufacturing being brought to Europe right now, but unfortunately what that means is that's going to lead inflation to stay higher for longer. It's also going to lead to higher interest rates, and I don't think the markets are prepared for this. The report shows Apple no longer feels comfortable having so much of its business tied up in one place. And that's absolutely right, everyone. Why should we have so much manufacturing in China? What this has led to is China to have a monopoly effect on the manufacturing, and they've been able to use this as leverage against other countries. So what we need to do is diversify supply chains and take that leverage away from China. But okay, what you've been waiting for and the new data to show that China is losing their leverage right now. Look at this, manufacturing orders from China down 40% in unrelenting demand collapse. So that's right, everyone, manufacturing orders down 40% in China. We're seeing absolute demand collapse. And this is happening in the holiday seasons. Wait till what you see will happen in Q1 of 2023 after people max out those credit cards during Christmas, and then they have to start paying their bills again. Listen to this. US logistic managers are bracing for delays in delivery of goods from China in early January as a result of cancelled sailings of container ships and rollover of exports by ocean carriers. Worldwide Logistics says it is expecting Chinese factories to shut down 2 weeks earlier than usual for the Chinese Lunar New Year, and it'll be very interesting to see what the demand is like for China Lunar New Year next year, because I think it's going to be a very weak one compared to what we've seen over the past 1 or 2 years. Supply chain research firm Project 44 told us that after reaching record-breaking levels of trade during the pandemic lows, vessels TEU 20-foot equivalent unit volume from China to the US have significantly pulled back since the end of summer 2022, including a decline of 21% in total vessel container volume between August and November. And of course, we can see that decline on this chart here. So again, everyone, what we're seeing is not only are people leaving China and diversifying their supply chains, also what we're seeing is the supply chain issues with China, unlike the mainstream media is telling us, they're not getting fixed. They're actually getting worse, and this is going to lead to more inflation and more shortages, so you better want to stock up now while you still can. Asia-based global shipping firm HLS warned clients in a recent communication about the ocean transport business climate. It seemed to be a very bad time for the shipping industry, with the combination of declining demand and overcapacity as new tonnage enters the market. The container shipping market will be further complicated by economic uncertainty, geopolitical concerns, and also the increasingly heated market competition. So that's right, everyone, we are facing a lot of economic uncertainty. Interest rates are rising. We're seeing demand absolutely collapse. We're seeing people's savings being evaporated. We're seeing consumer credit card debt go to record levels. And also what we're facing right now is huge geopolitical tensions. So what this is causing is we're kind of in an economic war right now with the West and China. They're battling for global supremacy, and China wants to be the #1 economy in the world, but it looks like that's not going to be happening now. But for all my viewers in the US, the West Coast ports are actually taking the biggest hit. Look at this, HSL cited trade data showing that US imports from Asia plunged in October to their lowest levels in 20 months. The spot rate for a container from Asia to the US West Coast has crossed the break-even point with little room for further reductions, it wrote. So did you hear that, everyone? US imports from Asia to the US have plunged to 20-month lows. We're getting back to what we saw in early 2020, so things aren't getting any better, unlike they're telling us. The large West Coast ports of Los Angeles and Long Beach have experienced the largest drop in trade, according to Josh Brazil, Vice President of Supply Chains Insights of Project 44, as shippers also rerouted some of their shipments to the East Coast to avoid the risk of major union strike at the West Coast ports. And these lockdowns in China are not making it any better. The recent rise in COVID lockdowns in China continue to impact manufacturing operations and delay cargo outputs. There are also local access obstacles for cross-province and cross-city transportation, mostly related to the truck driver testing requirements, with trucker capacity to be largely affected. So if any of you are watching that work in the trucker industry, let me know down below how it's affecting you. So everyone, I know what you're thinking, well, okay, what does all this economic jargon mean for you in simple terms? Well, what this means is, everyone, we're going to see China, the second biggest economy in the world, face some huge headwinds. We're going to see companies like Apple and Tesla pull their production outside of China, and they're going to diversify their supply chain issues. And while this is good in the long term, in the short term, it's going to make things much, much more expensive. Also, what this means is we're going to see some shortages for certain products. So if there's certain things you need right now, I'll be buying them now in case of any more shortages coming up anytime soon. What this also means is the relationship between the US and China is just getting worse and worse. We're seeing the geopolitical situation across the world getting worse and worse. Confrontations between countries are getting worse and worse. And I think things are going to hit a tipping point in 2023. But the good thing is, hopefully we'll be able to bring back some of that manufacturing onshore, and China will lose a lot of that leverage they held over the world by saying, look, we produce all the goods. If you don't go along with our agenda or what we want, we'll stop providing you those cheap goods. Well, it's looking like they can't provide them now anyways, so these companies have pretty much nothing to lose. But again, this is going to lead to higher inflation, and this is going to hurt global growth. What affects China will affect us in one way or another. So I don't think the global economic picture is going to improve in early 2023 at all. But everyone, what do you think about this? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.